Hey, this is Jeff Fortune of Auto Trends with JeffCars.com. Today we have with us one of our industry analysts, senior industry auto analyst with Bloomberg Intelligence, Kevin Tynan. We're going to do a recap of the first quarter of the year. Also, we're going to give you some projections as far as what to look for as we head into late spring, also the summer selling season. All right, Kevin, I got some headlines to talk about quickly. New vehicle average transaction prices dropped to a two-year low. In March, the average transaction price of a new vehicle was $47,218. This is down 5% from December when the market peaked, December of 2022, and it's still 16% higher than March of 2021. But the numbers are going in the right way. Interest rates, obviously, you are staying connected with the Federal Reserve saying right now. I'm looking to actually have a conversation coming up with Experian Automotive where they look at the back end of what's going on in finance of all the dealerships, and they look at where interest rates are, where car payments are, both new, used interest rates. We look at leasing. We're going to talk about some of those things with you. Let's look at the trends. Give us a recap as far as where we were for the first quarter. Give us the big industry recap, and then also take it to us from a consumer level as far as what trends we saw analyzing last month. All right, I'm handing it over to you.
All right. Well, thanks for having me, Jeff, as always. So pricing certainly down. Looking at a December comparison is a little bit difficult because that's a very heavy truck month. There's, in terms of businesses buying vehicles in December, you can take a full year of depreciation. So we tend to get a spike in average transaction price in December. That said, you're right. The March reading in the low 47,000 range is the lowest it's been really since the beginning of the pandemic period. And that is a function of inventory levels. So inventory is right around 3 million units again, which on the one hand, to your point, is good for the consumer. It increases price flexibility at retail, at the dealership, hurts their margins for sure. But the dealers,
they've been making a lot of money. They've been hand and fist making money. I'm not worried about them. I'm looking at it from the consumer standpoint. I know you're looking at it also from the dealer industry standpoint. So I'm tugging war with you right now.
Yeah, well, but look, and here's the thing also, and I had done this analysis just recently. When you look at, and I was looking at the concept of direct sales, right? The factories becoming retailers and selling directly to the consumer.
So we're looking at like the model with what Rivian is doing, what
Tesla,
doing,
right?
As opposed to the traditional dealer network. And we're going to have a conversation about that, but take it from here.
But so if I'm thinking about that business model where the manufacturer is going to sell directly to the consumer, and within that model, I'm going to also assume that the consumer just pays MSRP, right? The dealer, the manufacturer says, "Here's our price." There's nobody to haggle with, or work a deal with. You just click the number because that's what they put on the website, and you buy the vehicle at that price. So looking at that relative to where MSRP is when consumers buy from dealerships, the savings since 2016, right, which was the peak volume year, consumers below MSRP is something like $220 billion. So while the consumer might say like, oh, it's easier or it's better, it's whatever the issue is with buying directly from a website or from a factory manufacturer directly, there's no price flexibility. You get that flexibility by going to your dealer who will work with you on pricing. There was 1 year, 2022, where the consumer paid over MSRP, and that number was $7 billion over MSRP. But to put that number in context, the very next year, the consumer was $9 billion under. And then this year, we're on a $20 billion under pace. So over the long term, it's been hundreds of billions of dollars in savings off MSRP by buying from franchise dealerships as opposed to directly from the factory.
Interesting that you said that. All right, so let's look at everything except EVs right now for last quarter. Any highlights, any consumer trends, anything stand out, such as when we looked at last month? Um, is there a trend, a shift with consumers wanting lower price vehicles, shying away from some of the higher price vehicles, such as high dollar SUVs, high dollar pickup trucks? Tell me what some of the things you
Yeah,
noticed.
I think there's been not as aggressive a move down market as you would think, and that is because those products only exist from a few manufacturers. You know, if you look at an average transaction price for the Hyundai or Kia brand, that's in the 30s.
Mhm.
$30,000 range. So somebody who's a first time or a move up buyer or an entry level buyer really only has product from a handful of brands that have vehicles selling in those segments. Like if you look at a Ford or a General Motors, average transaction prices for those companies are well up into the $50,000 range. And
And
they
that's
just don't have,
nuts.
right. So
Yes.
they just don't have Ford Focus or Fusion anymore, Chevrolet Cruze. The products simply don't exist. You know, and the manufacturers, that has been an orchestrated shift away from the bottom of the market because there's no profitability there. So there are products available from import automakers who are either able to, which isn't so much the case, or willing to not be profitable at those price points with the hopes that you can create a loyal customer somewhere in the upper end of the portfolio at some point in the future. But it's not simply, oh, lower prices race to the bottom kind of mindset. The manufacturers have done the exact opposite, run away from the bottom because you can't make money there.
All right, let me throw this out. I think we may have had this conversation back in January when we were recapping 2023 sales. Only 8 vehicles in the market have an average transaction price below $25,000 as of
Yeah.
last quarter, and then only 2 of those vehicles are have an average transaction price below $20,000. That's the Kia Rio and the Mitsubishi Mirage. And so, and then when we look at vehicles over $80,000, there were more vehicles that sold over $80,000 than there were vehicles under $25,000. I'm getting calls all the time for folks who have been out of the market, and they're like, Jeff, these prices are crazy. We can imagine paying $700 for a car payment, which that's about what the average of a new vehicle is today. When we're been used to paying $500, we're just not used to this. So,
Yeah.
in saying that, what other trends are we seeing right now? So, for instance, I noticed that Jeep with the Grand Cherokee, their sales were down for the quarter slightly, and they decided to do a price adjustment, a readjustment, where the price slid back for the Grand Cherokee to see if that's going to increase sales. We're going to talk about the EV market in a second, but I also have to be realistic of is that if EVs are accounted for 7 to 8% of sales, then you got about 92 or 93% of folks don't care about EVs. So let's talk about also what's going on with this shift with hybrids right now. Toyota seemed to be one of the winners for last month with a huge increase, double digit increase in sales last month, while a number of automakers actually struggled because Toyota seemed to have taken the state the course with we're going to focus on EVs. When we look at electric vehicles, fully electric vehicles, we're going to hand the market off to everyone else. I looked at where Lexus EVs accounted for about 2% of their sales. Toyota probably maybe slightly higher somewhere along there. And we look at other automakers such as Tesla, Rivian, General Motors, even Hyundai and Kia had a larger percentage of the market share. So also, let's take into consideration too, the EPA made an announcement back in March in which they were going to revise and relax some of their standards for what they're expecting the automakers to meet. And with that, how does that affect what consumers will probably be buying, and how does that affect as far as where the automakers are going to be going as far as their mix of focusing on electric vehicles, possibly getting back into the hybrid game for a number of them, and also plug-ins?
Yeah, and that's a difficult part of it is the government. They make rules that become difficult for the manufacturers or even the consumers to meet, right? And I hate to use the words arbitrary, but the fact of the matter is, if the manufacturer can't be profitable on those products, the consumer shows that they're not, overly enthusiastic about buying them in volume at this point. There's almost nothing left to do for the government except to walk back some of those targets. And I feel like the way the pressure is on the demand and profit profile of advanced drivetrain technologies such as battery electric or plug-in hybrid, it's going to be very difficult for the government going forward to say, you must do these things. We don't care if it loses you money. We don't care if people don't have the ability to charge these things. It's not realistic to hold to a target arbitrarily when the consumer and the manufacturers just can't make it work.
All right, Kevin, on that note, let's pause for a moment and we'll wrap this back up after the commercial break, where we're going to talk about the average price of a luxury vehicle is about $62,000. Average price of an electric vehicle dropped about $54,000, but still slightly higher than where it was in February. So sit tight. We'll be back after the commercial break. Hey, this is Jeff Fortson of Auto Trends with JeffCars.com. We're continuing our conversation, preparing you for the spring and summer selling season. We have with us Kevin Tynan, who's a Bloomberg, who works for Bloomberg Intelligence, and he's a senior automotive analyst. Hey, Kevin, welcome back, and let's continue the last leg of our conversation. Like I know, we got so much to cover. We're not going to have enough time to cover everything. So let's see how much good information that we could impart to our listeners so that they'll be prepared for the spring and summer selling seasons, and hopefully looking for more affordable vehicles. So with that, let's pick up on the conversation that we had about this switch. Seems to be this shift with the number of automakers. Headlines: Ford is, after looking at first quarter sales, Ford has decided that, hey, this EV strategy of all in, we're going to go in reverse for a second, and we're going to pull back hybrids into the mix. General Motors says, hey, we're ready to put hybrids back into the mix again. Even Mercedes-Benz, who was all in on being one of the first automakers to go all electric, is saying, you know what? We're going to have both electric vehicles and gasoline vehicles. Down in Georgia, where I am, but not real South Georgia, where there's a new Hyundai plant. Huge investment that they just made on EVs. They're saying, we think we're going to be able to build both all electric vehicles and gasoline vehicles in this plant. Take it from here.
Yeah,
what does this mean for consumers?
Yeah, so Toyota, who was much maligned for being slow, even Stellantis and the Chrysler brands for not being all in on EVs or being at the forefront of the movement, are the ones that have been proven right at this point, saying that all technologies are probably necessary if we are really talking about climate impact and not just this capitalism shift to a more expensive technology. So I think where we're getting to now, Jeff, is that the battery electric vehicle makes sense as a smaller vehicle, right? Sort of an urban runaround. To put bigger and bigger batteries into larger trucks, Hummer EVs, even Cybertruck, right? The efficiency is just not.
I just saw my first Cybertruck this week as I was at Home Depot, and it was actually towing a vehicle. It was towing not towing a vehicle, but it was actually towing. I don't know what it was towing, but it was towing.
It's interesting design, if you ask me. But so the point is that there's probably a use case for the technology that's better than the way we're at least the first phase of the technology, the way we thought about it. And then at the other end of the spectrum, I think the gasoline hybrid, anything, and talking about a hybrid with like Toyota Prius without a plug, is the technology that automakers are starting to see more attractive because you can get consumers in it at a more obtainable price point. The plug-in hybrids, there's still a premium to them. And what we're finding the problem to be is that if you have a plug and you have a gasoline engine, people tend to not charge them as much as they need to. And you really lose the benefit of having a plug-in hybrid and paying the premium for a plug-in hybrid that you use essentially as a gasoline hybrid. So consumers are starting to come around and say, well, I'll just buy the gasoline hybrid. And when you think about some of those vehicles, Toyota Prius, for example, you're talking 50, 60 miles per gallon, which is more than ample in a lot of cases for consumers.
All right. So in talking about that, we hit upon during the first segment about average incentive spending right now. So let me throw out some numbers. Depending upon what source you're looking at, is that average incentive spending for the first quarter ranged anywhere from the high twos to about $3,100, which meant that's what consumers could expect when they went to buy a vehicle, which was up about 102% year over year. Incentives haven't been this high since May of 2021. So again, this is a great thing for consumers, but it's also happening in only certain segments right now. Also, there are three brands when we look at that have relatively low incentives right now. And for the last quarter, when based upon average transaction prices, that's Land Rover, which is selling a lot of their vehicles. Most of their vehicles transacted over $100,000. Porsche and Toyota. So with that said, let's talk about this drive toward electric vehicles right now. So recently, Fisker, which is a startup company, they've been around for a moment, and they've kind of been off and on. They're creating a dealer network right now and doing something a little different than what Tesla and Rivian is doing, is that they're in bankruptcy and they've been looking for partners to come along with them. I think Nissan was the last one they were hoping that was going to probably partner with them to save them. Their vehicles started out at about $69,000 now, discounting about $24,000, the electric vehicle discount. Actually, not the electric vehicle discount. It's the discount they're offering right now on many of their 2023 models to stay afloat. And depending upon what model you get from them, you can get a Fisker 2023 ranging anywhere from as low as $24,000 to probably $40,000. You as a consumer, would you recommend someone buy one in the midst of, we're not sure if they're going to be around or not?
Right. That's the
great
risk.
deal.
Yeah, that's the risk you run, right? Is where do you get it serviced? Where is your after sales support at that point? Charging it wouldn't be an issue, but it would be that warranty work, which you would probably think that could be a significant amount of, at least just from, the first early stage vehicles coming out. There's probably going to be some sort of, even if it's just software issues that can be handled over the air, there's going to need to be some after sales support. So more so the concern about the deal, the brand, the quality of the vehicle would be what happens 6 months, a year, 2 years from now, if there is no more Fisker. And what do I do with this product at that point? So you would be having to get it at a very, very attractive and affordable price to be able to offset that potential risk down the road of there being no parent company anymore to support the product that you bought.
And actually, I'm a part of the T-Mobile network. So every Tuesday they release new deals. And today, one of the deals is you could actually win a Fisker. And I'm like, that's the only way I'll take access of it, because it all gets plus for the taxes. But
upgrade your phone plan and get a Fisker.
Exactly. All right, so let's talk about this whole EV market right now. So Tesla kind of started this thing of this price flux as they adjusted their price. Also, I'm running a brand new commercial, which I hadn't even mentioned to you, and for my series program. And I've got four voices in it. Yours is one of them. And what it states within the 30-second commercial is that something about dealers, automakers offer discounts as production backs up or increase on the lots, which is just basic information. And so we noticed that Tesla started cutting the price of their vehicles. Rivian started cutting the price of their vehicles. Also, I went on Lexus's website with their only fully electric vehicle. They have a $20,000 discount. And that's not off the dealer website. That's off of Lexus's website, depending upon what region of the country that you're in. Also, Mercedes-Benz have been deeply discounting their vehicles. And then we look over at BMW, and from Bloomberg headlines states that they're making profit off of their EVs. Talk to us, Kevin. What's going on? It's like two different worlds in this market.
Look, the incentives, discounting are they're about inventory management. I've been adamant about this point. There is no such thing as a price war, right? An automaker may drop prices or offer incentives because they have too much inventory. Period. Amen. That's it. So anybody else who follows suit isn't because a competitor did it. It's because a competitor did it and you're concerned about losing your market share because you now have too many units on the ground. So if my house is in order as an automaker in terms of my supply-demand balance, I'm not cutting prices. There's no reason to. So incentives, discounting is all about inventory management. And you can really follow along based on that on who has too much stuff and who might not have enough stuff, right? So if you're raising prices, you have a demand outstripping supply, and you have price power and margin power. And it's really as simple as that. So, every manufacturer handles that in their own way. And the walk of it is you discount, at the dealership, and the manufacturer might give a little bit of dealer cash there to help clear the lot, so to speak, so that the production that I'm doing out of my factory has a place to go. Now, if that stops working, now I'll overtly offer incentives, and it could be low rate financing. It could be aggressive lease deals. It could be cash on the hood, whatever it is. I need to clear these vehicles out so the factory will step forward and offer that. When those two tools stop working, you get a production cut, which is a worst case scenario. Because
Kevin, so I'm going to interrupt for a second because we're about to wind down this conversation here. So, yes or no, is this the best time to buy an EV right now? If you're
it's going to be difficult to have it be better than this because there's so much oversupply.
All right. And talk about it also, I want to talk about the used car market just a little bit, but we're going to have to wind this conversation down. So if you're in the market to buy a vehicle right now, we ask that you continue to shop around from automaker to automaker, see where the deals are. As Kevin mentioned, as I'll back him up on, is that EVs, if you're ready to dive into it, this is the time to do it right now because of the deep discounts within the market right now. Also, keep your eyes on what's going on this weekend with the United Auto Workers, with the UAW, is that they're making a big push to unionize probably their first foreign plant. And we think it's going to be a VW in Chattanooga. Mercedes may follow thereafter. And with that said, Kevin, take care. And we're going to reconnect with you later this fall.